All right, moving on. Then let's get on board Nilesh Jain, Head Equity Derivatives and Technical Research, Centrum Broking, who's joining us now. Hi Nilesh, thank you so much for joining us on the technicals. Nilesh, first up, it was a day of correction yet again. We did see a bit of a breather come in yesterday, but yet again, despite positive global cues, we have managed to correct. Now, this is a correction that we have been penciling in, but Nifty also managed to slip below the 25,400 mark today. Tell us, what are the levels to watch out for, and what are the levels that you're keeping on mind that will ensure that perhaps an uptrend is intact? So what are the levels to keep in mind going ahead now?
Very good afternoon to you. Absolutely. So today, in fact, for the fourth consecutive session, we have seen a bit of a consolidation that has extended further. And today being a weekly FN expiry for the Nifty, we did see some bit of unwinding of the position from 25,500 strike. And put writers, in fact, witnessed some bit of unwinding of the position from 25,500 put strike. Now, looking at the overall setup, we are expecting this consolidation to continue in the range of 25,200 to 25,600. So that's the broader 400-point trading range on immediate basis. And that is acting as a support and resistance level respectively, 25,200 on the lower side and 25,600 on the upside. So on the upside now, it is important for the Nifty to reclaim 25,500 mark going forward for bulls to regain the control, and we may see a follow-up move on the back of short covering as well, post breakout about 25,400. So that is much needed breakout that is awaited now. The VIX, India VIX Volatility Index, which is currently at 12.41, which is very much in the comfort zone. So that is not giving any sort of an indication that we may see any further major sell-off from here. So this consolidation with slightly negative bias may continue further. But if at all we see any decline towards 25,300, 25,200, that can be a good entry point as far as Nifty is concerned. Now coming to Bank Nifty, the structure for the Bank Nifty looks slightly weaker compared to the Nifty index, but it has multiple supports starting with 56,400 followed by 55,800. So these are important supports to watch out for. If at all we see any meaningful decline towards 56,400, I think that can be a good entry point in terms of fresh entry on the long side. So as of now, we are focusing on sectors and stocks. Sectors and stock specific action should be in focus. And on index fund, we are expecting sideways momentum to continue.
All right, that's the advice which is coming in from Nilesh. But coming to your picks, which are the stocks you will advise in this momentum? As you mentioned, the range between 25,200 to 600. Which are the stocks one should pencil in?
Right. So I have two buy recommendation. First of all, Bombay Stock Exchange in this counter in previous 6 consecutive session, we have seen range bound trade. The stock today has given a good breakout with a good volume participation from a falling trend line. So we are expecting from here a strong pullback towards the levels of 2,940 to 3,000, and a stop loss can be placed at 2,750. So BSE is a buy. Apart from that, defensives are once again back into the action. We have already seen good momentum in pharma, IT. Now I think FMCG should witness some bit of a catch-up move. So within FMCG space, Dabur specifically, this particular stock is looking attractive at current level given the kind of a breakout that we have seen today with good volume participation with the buy crossover on MACD as well. So Dabur looks strong on the chart for a follow-up move to continue towards 508 to 515 from a short-term perspective. Stop loss can be placed at 482.
All right, so the two picks coming in there, Nilesh, buy call coming in BSE and Dabur with the target price of 2,940, and for Dabur the price is 508. But thank you so much for joining us with your buy calls. Let's move on and